We welcome back, by popular demand, Dan Brouillette, former U.S. Energy Secretary, Art Laffer, former Reagan economist, and Steve Moore, host of More Money on WABC Radio. Gentlemen, welcome. Dan Brouillette, I just want to stay with Kharg Island. We talked a little bit with Aaron Cohn about it. But the pipes, how much of Iran's oil goes through the pipes? How much of it goes through the waterway of the Strait of Hormuz? I don't know if anyone's really focused on Kharg Island until the last weekend when it got slammed by Allied bombing.
Yeah, hey, great to be back with you, Larry. I really appreciate the conversation, the opportunity. I learn from you every single day. Look, I think people need to understand what Kharg Island means to the country of Iraq. Roughly 90% of their oil that hits the water comes through that one island. It's an island in the northern part of the Persian Gulf. And the easiest way to understand it is Kharg Island is to Iran what the Strait of Hormuz is to the rest of the world. It's a choke point. It's probably even more than a choke point, Larry. I would refer to it as a kill switch. If you take out Kharg Island, you've taken out 90% of the revenue that goes to Iran. So that's a very important point. I think the president understands that very, very well, which is why he's done what he's done. I think he has sent them a very, very loud signal. It's a warning shot, a shot across the bow, whatever you want to call it. But he has sent them a very loud signal. If you don't come to the table, you don't negotiate, this thing is going to be really at risk. And I think what he is trying to provide them is an off-ramp, perhaps, to this conflict in the region. So we'll see if they take it or not, but I think that's what he's trying to do here.
Art Laffer, I don't know if you know Kharg Island or any of the geopolitics here. Of course, if you knock out you'd knock out Iran. You'd also, the oil markets would take a hit. Prices might jump up again. That doesn't bother me as much as it bothers some people, because I think the mission is much better. And I think Americans understand that. Americans know that the mission is more important than some temporary jump in oil prices. So how do you see this thing?
I think it's exactly correct, Larry, on that. The mission is it. We got to win. We've got to do it correctly. Don't rush the job. Get it done right. Get it done completely, and then we've got it. We came in here to get Iran out of the picture as a terrorist nation sponsoring all sorts of horrible things in the world. We need to stop them from doing that. That will be an enormous plus for the world. I hope the rest of the countries that we're serving chip in and help us with this. I mean, you know, I don't know the oil thing, but a year from now, oil's not going to be a problem. The more we talk about oil, the more we're just chasing a shiny object. That shiny object should not be chased. Just get the job done in Iran. Once that's done, I think the economy will be back on track. We've got everything set for an expansive, great expansion of this U.S. economy, and I'm very pleased. And we need to get Kevin Warsh in there and get those interest rates, stability to prices, and we're off to the races.
By the way, Steve Moore, it's an interesting point. Manufacturing came in pretty strong today. In fact, manufacturing has been strong from the industrial production numbers, especially business equipment. That may seem like small beer with the grand scheme of the war, but nonetheless, there's a lot of tailwinds and incentives behind the Trump boom, which I don't think are, just because we had a little bump up in energy prices, is going to stall out. So I want to get your take on that. And do we, you know, at the same time, what about the NATOs? The NATO allies, I'm calling them allies, I guess they're allies. Right. Do we, you know, I mean, the president would like to have them on board. It seems more political. I mean, so fine. Bring in the NATO out. We don't need them. We don't need them at all. I mean, they're not going to do anything militarily. I don't know. They have some strategic reserve. I mean, really, NATO? Come on. NATO should copy the Trump economic policy so they could get their manufacturing going again. Go ahead, Steve.
Yeah, isn't that the case? And by the way, that manufacturing boom you're talking about, the purchases of equipment and machinery, that's a direct result of the Trump tax cut, which gave the immediate expensing for those kinds of capital investments, and no surprise we're seeing a boom. But look, I like Donald Trump, are just disgusted with the Europeans at this point. I mean, my goodness, it's in their own interest, Larry, to get the rates of Hormuz open. They're paying high gas prices too. And I don't understand it. I mean, this is not what an ally does, especially when it's in their own interest to make sure that this free flow of oil. I'm with Arthur. And by the way, Arthur, the futures markets are saying exactly what you're saying. That 3 to 4 to 5 to 6 months from now, we're going to be back to $50 to $60 barrels of oil. That's what the market is telling us, and it can't happen soon enough.
Yeah, people should have a little bit of patience. Dan Brouillette, you know, the futures market, there is a wisdom in the futures market. It's usually right, not always right. I just wanted to know, when you tally up the barrels of oil, okay, the Saudis are moving through their east to west pipeline. Mm-hmm. The beneficence of Mr. Trump is to allow the Iranian Kharg Island pipeline to, so far it's intact, okay, but you're saying that is the basis of most of their oil. We are, however, at the same time, letting them transit some of their Iranian oil through the Strait of Hormuz, which I see as, again, Aaron Cohen would call it psychological warfare. You know, the door is open, maybe some discussions. Is that possible? I mean, how much of this goes through the Strait of Hormuz and how much of it doesn't?
Well, it's roughly 2 million barrels a day, give or take. Is what they were taking out of the island and putting on through the straits. But they're not doing that today. I guess it's down, you know, much lower than that. But on average, it's at 1.5 to 2 million barrels a day. And I think, Larry, when you think about what that means in terms of the world supply, look, we produce roughly 105, 106 million barrels a day. We consume about 104, 105. If we took all of that off the market, all 1.5 million barrels, all 2 million barrels, whatever that number is today, we might see a small spike in prices, but it's going to be because of the war. It's going to be because of the risk premium that's associated with going in that particular area. It is not going to be because we've lost that oil in the marketplace. It's not going to be a supply shock, I should say. So I don't think that the impact is going to be all that great. And that's why I think about this in longer term blocks of time. I think as we look at that futures market, as you mentioned earlier, it does show that the prices are going to come down, and quite dramatically. And I think all of these little things that we're looking at in the marketplace today are simple bumps in the road. They go away, though, really, really quickly if this conflict comes to an end. And that's why I think the president struck that island. He's giving them an off-ramp. He's giving them an opportunity to come to the table. If they don't come to the table and he does take it all out, again, we're going to see a short blip. It's going to come right back down. Yeah, well, they maybe, you know, continue their stupidity and not take it. Then that's, the president has made his position very clear, what he's going to do to them. Art Laffer, it's just, again, it seems like small beer. In fact, you know what? We'll save Kevin Warsh for another day. We'll save Kevin Warsh and Jeanine Pirro and the Justice Department and Senator Tom Tillis and all that stuff for another day, because we really would like to have Kevin Warsh running the Federal Reserve as soon as possible. I see Steve not. I mean, I don't know. We don't have enough time to do it justice. But, you know, we'll have a movement, and we'll have another segment on the whole thing. Steve Moore, congratulations. 65 areas require a photo ID. The only one that doesn't is voting. I knew it was in our riff.
The hotline today.
It was in our riff. It was in your hotline, and it was totally fabulous. Dan Brouillette, you probably don't know what we're talking about, but it's great fun having you on board. Art Laffer, wonderful to see you. Steve Moore, thanks ever so much.